The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Really had a very dear friend of mine on yesterday from Hong Kong, and we kind of discounted, I think, where he's come from and what he's accomplished in his life. The guy is a huge trader. I know we talked a little bit about, from the brokerage side, but Joseph Chung is a guy that will put some heavy weight on some trades. And, he and I have commiserated about some bad trades, but we've actually done some very good things together. And it's, he's a very logical thinking kind of guy, and he's been in a lot of different situations. So it's really good to get a fundamental opinion a lot of times from him to kind of overlay on the technicals. He's a big technical trader too. He travels extensively in the rim over here, and he's probably spending half his time in mainland China. So he's a good sounding board for some of the things that are going on in China, and you hear all these stories from the news wires. But I love to get his opinions on things. And he's been on the Deutsche Bank's desk, the JP Morgan's desk in New York, and places like that. So he's been around the block, and I love to shoot the stuff with him. Here's the S&Ps. And yesterday let's just kind of go right to the 240s for a second. And I'm going to walk you through my little nightmare yesterday, because pre-market, we were right here. When we did the show, we were trading about 2064, 65, somewhere in there. And this is basically the same bar going back 24 hours. And we talked about trying to leverage off that 2068, 2069, 2070 area. And we got a little bit too high for my blood, I guess, which we got into this 2076 area. And we always talk about, if you got some convictions about it, don't be afraid to get back in the water. We came back down, we got below it, we kind of rattled around a little bit. We got as high again as 2074. I got stopped out twice is what I'm trying to say. It was a pain in the butt, but getting back in the water again, that really paid off. And what happened, and the reason I was really kind of stoked a little bit about, if I can use a surfing term, was the kind of the mixed up scenario here, and the dailies really never got too out of whack on the north side, and we just basically had a mixed bag. And we had talked about why were we leveraging off that area, because of this situation right here, this 2068, 2069 area. So we had a decent pullback. I wasn't expecting him one day to come down into these inflection points down below, but left some weight on, not a lot, to test the waters down there. So that's kind of where we're at with the S&Ps. We're right back in the middle of a fair auction. Here's the long-term weeklies on the June contract. Let's just show that really quick. You got 63.50, you got 68.69 up there, you got 70, you got some resistance up there. I think that we could head lower, and I'm just staying in that camp right now. And I'm staying in that camp because of this situation here. And I've lost everything I was showing here. Okay, we're back. I'm hoping you guys are seeing that. Let me see. Okay. Okay, so that's the situation on the S&Ps, and where we headed now. We're trading 2053, 25 now. Here's the 240s. Day traders do have something to lean on. New 240 box around 2059. We came off that was in force before this bar, so we came up and hit that and traversed. Let's see, about a point higher. That's it. Now we're just kind of staying below. So that's where the short-term traders need to more than likely orient stops around 2059. I'm still a little bearish on this, so I'm not talking about trying to go long this right now. So that's the situation on the S&Ps. The NASDAQ, let's just give some numbers. we talked about this being very bearish yesterday. We don't have a profile usually do that too often, but we talked about the lineup right here, pre-market. We never even got up there and touched it again. Excuse me, we're coming down in here, and what this really was, the 43.91, and that's coupled with the 43.89. So you had a really close, tight confluence there, and that. Remember, we talk about when profiles are above price action, when they appear and they're above price action or appear below price action, those are, well, in this case, very bearish. And then if we have profiles appear below price action, that's relatively bullish. Okay. Now, what do you do with the NASDAQ? I'm still bearish on both of these products, the S&Ps and the NASDAQ. If the NASDAQ, going back to the weekly situation, and we haven't had a weekly close below profiles in a while, it's been, what is this, October? This will be technical damage on a long-term, get below 42.41. We've already had the technical damage start here on the daily. So it seems like the NASDAQ's relatively weaker than the S&Ps, and you got to kind of readjust your thinking there a little bit, because that's not been the case in the near past here. Let's take a look at the Shanghai. Joey had really stated, he thought we might get some relaxing moments here and kind of come back and retest some things, and that didn't happen. And we also talked about it churning up top here and consolidating above profiles. If that's going to be the case, then you might have to chase this higher. We pointed out a couple of ETFs yesterday, and hope you guys caught some of those. But this is something, like they've done their thing for 6 months on the rate manipulation game. And now they're starting to show some green shoots from that game, if you will. So, what do? Do you put on the brakes and, or no? That the general tone of the world right now is to start rigging things and then use the word patient, and the drill when it comes to that. Let's take a look at the dollar. And we've been pretty, bullish on the dollar. We had that close above. We had the retest. We moved higher. We're still looking at this with stops below 98. There's not a lot else to talk about when it comes to the dollar. Does that affect commodities in general? Yes, absolutely. So let's go down into gold. And we talked yesterday about a little bit of a area, 1177 down here on the dailies. Possibly use that to move higher, stops down below. You got a little bit of a range from 77 down into 71. You've got to pay attention to. That's based on the dailies and the weeklies here. So that's your support DMZ, if you will. And you got to probably say uncle below 1171. That's the sum on the June contract. Let's take a look at the notes. We're just going to go through the usual suspects first here, just to cover the normal basis. And we got a report coming out. Here's the action on the notes coming right. This is real-time quotes, guys, coming right into that inflection point on the daily. There it is. We talked about the target, 129.06. That's currently being met. Talked about leveraging 128.11 up into 129.06. It's being met. Do you short it here? I think you pass on that, guys. That was a target-rich environment. I think you take off half your position. If you could see this. And it's a pretty big reaction for that. Let's take a look at the 30-year while we're looking at interest rate sensitive issues here. 30-year, 60-minute. Here we go. AC was a little slowed down right now. We talked about some targets on the 30-year. In fact, yesterday. Let's see what's going on here. We got our task manager running on instance too. We got our task manager running on instance too. We do, right? Okay. I can't seem to pull it off right now. Oh wait, yeah, God. Sorry, guys. Here we go. Here we go. Here we go. Just make sure it's not. Well, these are 1, 2, 3, 4, 5, 6, 16 core Xeon processor running this thing right now. Interesting. It's amazing the computer power that you can lease these days. I can't pull the 30-year information up right now. I think the CME might be a little choked up. So we're gonna wait on that. S&P's not really affected. Dollar not being affected. That's amazing. The notes and the bonds were just kind of trigger happy right then, huh? That tells you something. Let's just look at gold while that's coming out. Yeah. Come on. Well, we're gonna, Michael, we may want to reboot this. Okay. Let's take a look at silver. We're having some problems with our charts right now. We're gonna try to get through these. Seems like we're having a historical issue here. All right, so let's go into another exchange. How about that? Let's see if we're that way across the board. All right, guys, tell you what, let me do this. Tell you what, on our break, we'll fix this. You know, one of the things that Joey said yesterday was really interesting. Some of the things that went on in the past. Okay, we're starting to get some data now, but some of the things that went on in the past, you know, in the first Chinese IPOs, you could always count on those coming down the chute. You know, some of these other places that I've visited, the Jakartas of the world, the Kuala Lumpurs of the world, the Tokyo's a little played out, the Shanghai, the Beijings, the Sydneys, the Manilas. You know, they're usually a little bit farther behind the U.S. Than we think they are, and some of the excitement that, you know, we've kind of gotten over. You know, okay, I've seen that movie before. I know how it ends. Some of these countries, you know, the Jakartas of the world especially, is a very ripe situation for startups now. I mean, the cost-effective situations are great. You know, I don't know what the temperament is by the average consensus of the guys out there who are, you know, on the CNBC talking about the you know, where the next movement of money is going to be and things like that. But, you know, it's interesting how these places are just continuing to ramp up, and the growth, in my opinion, is still completely untapped over here. So in my opinion, based on what Joey's saying, you might have another round of these things coming down the chute, and we'll pick that back up when we get back off the break.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Here's the XLF, and I love this. I love it now. We got the profile above price action. It's relatively, historically speaking, statistically speaking, not a bad thing when it comes to shorting this thing. And I need to post the chart. There we go. So as you see, this profile yesterday appeared above. We're not really in that phase yesterday morning. When we were talking 24.28, now is going to be the leverage point, stops above there. That's kind of what I'm looking at. 24.28 combined with this 24.47. I'd love to see this thing drift back down into the 23 and 23.07, 23.15, somewhere in there. I think that can happen. We're going to take a look at a couple of internals of the XLF. And let me pull up my scanner here really quick. So I'm going to select none. I'm going to go in here and go to XLF. Voila. You guys see my charts now? Just asking guys in the den there. Are we good? Cool. Al says we're cool. That's all I need to know. Okay, this is, we're going to wait for that. We're going to go into a couple of household names of the financials. Trading 60, about, what is it, pre-market here? 60, damn it. And I'm mixed up this morning. Let me get this over here. Okay. 60.12 pre-market, JP Morgan. What do you do with this? Here's the weekly on JP Morgan. I've been somewhat bearish on this. I still like this as a bear play. I'm trying to hang on. And again, last week we caved in here, but 60.72 stops above there. That's kind of what I want to kind of focus on JP Morgan. Here's the scanner pulling up the XLF stocks. I just want to go down the list. I've got kind of a test thing in here. This is my admin terminal for me, and I am still looking at the logic for some of the things. So like if I'm looking at, Bank of America, I can go in here and now get some English, like American International Group, AIG. I want to hit that. What we're constructing here is kind of an if-then text-based with specifics. So its trend is favorable to longs and has been enforced for 9 weeks. Primary long-term support at 55.21. Protective stops below there. This will signify the new long-term support. So a lot of people have really liked this product, and it does a lot. I mean, it's filtering and it gives the breaths obviously on quite a few different major pieces here, but telling the story was something that was really, long-term support's been at 23 weeks, blah, blah, blah. So we're still looking at some of the logic in this right now because I want the paragraph to actually say exactly, what I would say. And we're just trying to cover all the if-then scenarios before we release this. But I think you're going to like it. I mean, this is something it's been a personal project of mine. Caution to longs, targets may have been met in the interim. So hopefully that'll also provide some extra guidance in the scanner itself. But while we're in the XLF, sorry to go down the tangential road here. Let's take a look at some of the American Tower Corp, AMT. Trend is favorable to shorts. We know that. So AMT, let's take a look at that one. AMT. All right, so this is kind of cool because, in fact, yesterday we, came up into that inflection point, very similar, 96, 91. Now we're sitting down and cratering below weeklies. So the cool thing is on this one, and if you go into the scanner, you got this AMT right here. I can go over here, mouse, and see these inflection points. I can go in here to the landscape charts, pull this up, and see that we're now getting below our weekly profiles. If you can see that, this is the level of the market. This is, real time. But right now we've got a new leverage point on the short side. I think the XLF is going to continue to go down. I think some of the components are going to go down. And this, fortunately, is one of the weaker ones as far as profiles go. So doesn't really show that way on looking at this chart itself. But when you're looking at it relative to profiles, I think gives some great, and look at this. Below profiles on all four levels, AMT. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're looking at CCI, Crown Castle International Corp, and got this up because this kind of gave us via the scanner, and I'm relatively bearish on the XLF. This is the XLF ETF components here I'm looking at, and if you'll notice in here, I've just got the XLF checked, and there's quite a few instruments here that we're looking at, but we're not doing any filters. We're just kind of perusing through the crowd, and we looked at what's some of the things that have really followed through here. American Tower, AMT, CCI, HST, Host Marriott Financial Trust. There's a lot of red here actually within the intermediate time frames, but I'm looking at things that have actually broken down long term, like the State Street. We've been talking about that for a while, and T. Rowe Price. That's another one we got to take a look at. So let's take a look at CCI first. These are, again, this is really, really good primer here. Weekly profiles appearing well above price action. That is just always bearish. Here's the weekly situation. That was our daily. Now we're getting the 84 could be the leverage point here. As you can see, the yield curve is more than likely going to be flat. And I'm looking at this 30-year right now. This is like a two-handle move already today. Here's the daily. We talked about not stepping off the gas pedal. If we get, this was a little bit of a target-rich environment up here. It's 164.24. But we talked about, is this a place to short? Did we reach an inflection point to reverse? No, we advised, we didn't advise. We suggested that might not be the best thing in the world to do. And if we get a close above there, that remains to be seen yet. But if we get a close above there on the 30-year, it's very similar to the 10-year. Here's the daily on the 30-year. Here is the daily on the 10-year. And we talked about not shorting against that 129.06. We talked about that's the target. Then we're going to have to kind of wait and see. So the wait and see is, are we going to close above there? And, can we consolidate up here in the higher levels? Remember, that's what Joey was talking about in the Shanghai. We want to try to just kind of wait and see what it's going to do. And the train may leave again on this thing, as well as the Shanghai. We just have to kind of watch the technical action there. Let's take a look at State Street again. This has kind of been something I've been personally paying attention to. Not a lot of volatility here, but not a lot of pain. Just kind of letting this thing drift a little lower. It's showing itself. Again, 74, 94, 75. That would be awesome for it to go back up there and retest that. But I think this thing's kind of showed its hand early. If you look at this is our weekly. Consolidate below the weekly profiles here. That's the good news. T. Rowe Price, TROW. Got this right from the scanner. And here we go. And why did the scanner have it? And this is another just wonderful situation. See that? 81.36. Profiles higher. This is kind of making me get a little bit more bearish on the XLF again. Here we go. Let's take a look at Weyerhaeuser WY. That's WT. That's not WY. WT is not a symbol. That's valid. Here we go. All right. Again, profile appearing higher than price action. These are all bearish tones. 33.15. Can you get a lot of bang for your buck by shorting Weyerhaeuser right now? 34.08 ultimate stops above there. I trade Weyerhaeuser and IP international paper a lot, and it's not going to give you the huge moves, but just playing sound technicals. And if you look at this, the way this is acted, this is kind of what you want to see for this thing to drift lower. Little look at Weyerhaeuser. Let's take a look at one other stock that was on my radar screen. Where is it? Okay, here we go. Host Marriott, we talked about that. HST, here we go. These are all financial stocks if you joined us late, because we're bearish on financials. And that yield curve, based on what we just looked at with the notes and bonds, may be flattening out even more, which can be considered painful for these guys. Got a profile appearing well above yesterday. That's very bearish. HST, here we go. Weekly closed below last week's, just hovering, consolidating. The good news is I think you can put stops above 2035. You got a kind of a dual kind of inflection point lining up here. I'd say you have to say uncle above 2055. Give it a little bit of noise, but I think this thing could head a little bit farther south. We're going to take a look at CMA Comerica. Here we go. All financial stocks, very similar setup. Got that profile appearing above on the daily. Love it. Could say uncle above 45.60. Let this thing drift down. Here's the weekly. You got a lot more room down here, down into 40, it looks like, 40.83 on Comerica. Alternatively speaking, let's look at CBG. This is one right off the scanner, CBG. This is one that's it's not moved too high for its own good. Don't look at this one like this. This is the leader of one of the leaders of the XLF, and this is something we want to stay away from on the short side. On a relative strength trading type view, this is one of the ones that just doesn't fit the bill. So we're gonna take a pass on this one, and actually buying a strong stock in a ETF or a market that may head lower. It's not a bad idea, but I think you've got a little bit better opportunities on the short side, in my opinion. Let's take a look at Bank of America. Bank of America is an interesting setup here. Scanner's telling me that we are sitting at inflection points here. So I'm looking at Bank of America. I'm looking at this. It says bottom right there. I'm looking at the price action. I'm seeing we're just, sitting on the top of the cliffs of Dover here right now. All right. And as I look at my charts, Scanner tells me, hey, bottom 9. Okay, that's great. A lot of gray there. Got another inflection point there. But, that doesn't mean. Let's see. Hold on. Bank of America. I'm just checking something here. Okay. As we look at the daily, let's just kind of look at what's been presented to us. This was yesterday. And that 15. We've been bearish on this stock. We've talked about it up around this inflection point, 1610 a lot. Now we're getting down to the bottom of the box here on our daily. We're at the bottom of the box on our weekly. I'm not a buyer of this because this is showing relatively strong signals on the weak side. The XLF may pull back. It may drag all this down. And the market in general, it's not been the best performing situation lately. Can you short a $15 stock? Yes, you can. Remember Alcoa. This is one we tried to leverage off. The breakdowns, 14.95, 12.85 were the targets. We actually surpassed that. And what do you do with this now? I think you put stops above 13.27 on Alcoa, and just dollars ramping back up. Here we go. A couple other stocks we want to pull out here. ACE Limited, ACE. Let's just take a look at that one. It's another financial stock. Here we go. Come on, signal. Here we go. All right, so here's something that obviously is just churning within a big fair auction. It's a relatively high price stock, 111, 112, and what we have on the dailies, we have that profile appearing above. That's very bearish. I'm very okay shorting this. That's why I pulled it up. I think we have a caller, Larry from Dallas. Are you there?
Morning.
Hey, Larry, how are you?
Oh, I'm doing okay. Would you look at FAZ, the directional financial?
Yep, FAZ. How's Dallas today?
A little cloudy, cool. It's going to be hot tomorrow.
It's heating up there finally?
Yes, finally. Yeah, we got a lot of rain. All the lakes are coming back up. It's good.
That's great. I used to live up on the Tollway North, almost right before you get to Plano, right up there.
That's where I live. I live in Plano.
Nice. Here we go. Here's the FAZ. I'm looking at the weekly here. Let me just pull this up. I've got it trading as of yesterday's close around 1238. Is that correct?
That's correct.
So you're looking for a possible turnaround on this? Is that the drill?
I'm looking for an entry point. Has it hit the D? The ABCD?
Okay.
It looks like it's a cup of the handle.
Yeah, I'm not a ABCD disciple, so I'm going to tell you what I see on my information here. I don't see this. I see this kind of following trend just like you do. And I'm sure you're looking for a chance to kind of catch this and kind of have a rubber band snap type of move up. Is that fair to say?
Absolutely.
Okay. Yeah. I mean, the thing I'll say, Larry, is things on their lows go lower and things on their highs go higher. And I don't see any technical reasons yet to start plowing in this on the north side. Here, the daily situation, you could do this. You've got a profile that we're kind of sitting right above, but we just kind of did a fake out on the last profile. You could be super stingy and look at this with stops below 1235 based on your appetite for risk. Right.
Mm-hmm. Okay.
I'm looking at this. You're looking at buying this, right?
Correct.
Okay. You could be super stingy looking at the top of the box here, 1235. Big time stops need to be below 1167. And here's the weekly situation. It's a relatively snapshot, same situation on the weekly. So as I look at this, can you buy it? Can you put the stops in and see what happens? Yes, but I'm looking at the long term. I just don't see, any serious reasons that we've turned around for you to kind of get real excited about this at this stage. And I'm sorry to tell you that if you're kind of sitting on the launching pad trying to buy it right now.
No. I was looking for a place to nibble a little bit.
Yeah, I'd let somebody else find the bottom on this. I mean, I always talk about that, and let somebody else kind of swing the sword and be the guy who raises his hand and said, I bought the low print. That type of game is always scary. Let's get some technical confirmations. Let's get above some areas to start looking at this. Okay.
Where would you enter it? At what point?
I personally, if I'm looking at a long-term type situation, I'd wait for it to get above 13, to be honest with you.
Okay, great. Thanks for the information. Have a great hour.
Great. I'd love to see a weekly close above 13, put it that way.
Thank you very much. Have a good day.
All right. Awesome, Larry. Thanks for calling in.
Bye-bye.
Yep. And here we go. Let's. We got about 2 minutes before we go to break again here. Let me kind of re-look at the S&Ps. We really haven't had any movement in these things since we had that ADP report, which is just driving the bonds and notes crazy. And again, that's here's the S&Ps on the 240. 259.30, still kind of looking at stops above that area. And here's the notes. Got above the target, 129.06. Still looking at that as probably won't slow down. All right, let's go back into the scanner here really quick. Excuse me. And let's go back here. Let's kill this. Let's go into the technicals here, because this has been one that's just gotten hit hard. Obviously, the Nasdaq got crushed. Well, its version of getting crushed in a huge bull market, put it that way. Let's wait for that to populate. While we're just going to pull up the XLK really quick. And then we're going to look at the internals. Here's the XLK. Technology sector. This is another one. I mean, profile appearing well above. That's just not good. Not good at all. We may see some more downside here on the technology sector. Michael, can you find out why this is happening? Yeah, I mean, it's just, all right. So as we come back from the next break, and here we go, we're going to take a look at some technology stocks in the XLK ETF, and we're going to take a look at some of the leverage points that maybe are appropriate to start doing some trading of some of these internals of the XLK. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. I hear we have somebody named Tom O'Brien with us. Is that true?
Hey, good morning. What's happening, John?
Hey, Tom. How are you? Good to have you.
Well, it's great to be on, man.
What's on your mind?
Well, it's going to be interesting out here today. I mean, these bonds are taking off, just as, listening to you.
Okay.
And it's going to be, they're at a crucial place right now, man. I mean, it's going to be really interesting that, can they overtake this swing point, and they're going to have the juice behind the move. But at this point, it looks like they're going to. I mean, we're at 412,000 right now contracts in the futures market, and we're only going against 1 million contracts. So that's going to be intriguing.
Yeah, I've got the 30-year up, and we talked about some targets up top, 164.24. It just blew past that, and looks like it might want to consolidate above that area and just kind of lurch forward. That was a kind of a relatively benign report too, wasn't it? I mean, it was almost like they wanted to go up no matter what. I mean,
no, there's no doubt. There's no doubt. And what was intriguing though is that it seemed like it come out of nowhere between the bonds going topside, gold going topside, and the dollar going down. Hey,
yes.
It's interesting. This is music to my ears. I mean, because right now my take is that this dollar is done. But this morning, Jack Lew, Treasury Secretary, comes out and says that we believe in a strong dollar. And it's so cool because the last time that we heard that, was John Snow in 2002, which our Treasury Secretary, and from that point on, the dollar went down. So that mantra is just that's just a tidbit in general about markets, but it just cracks me up, man. It's the first time we've heard that since 2001, 2002.
That was that I just you started calling for a strong dollar. I think we were trading around 80 or something like that, and
Yeah.
I was like,
Yeah.
I was listening to you going, man, that's that's taking a stance. So that, but when we started, getting above weekly profiles above that 81.50 area, man, that's just been a great trade, and I commend you for talking about the strong dollar back then.
Now I'm
awesome.
on the other side.
Yeah, I know, but that was 20 points ago in the dollar. I'm just saying you have called the dollar relatively well, is what I'm trying to say. So
I appreciate it. Hey, I really like those new paragraphs on the profiles, man. That's pretty cool.
Well, everybody's going to get them. I'm just trying to put my final, I'm kind of flashing them right now. I'm just trying to put my final logic into it right now. And I think this is going to help a lot of folks because it gives you stops. It gives you, to some degree, targets. It tells you where the trend is. And I think that might have been something missing. A lot of people were kind of, oh, man, this is a great tool, but I really want to, know how to use it a little bit better. And this kind of almost tells the story for you. And we've actually got it in some institutional hands right now for some feedback. And they're just my God, why didn't you come out with this 3 years ago? So
it's
yeah,
there's no doubt.
I'm pretty pumped. Hey, the Nasdaq breadth has really gotten ugly here. So again, that's kind of been the weaker instrument. I'm looking at it right now, and we may have the weeklies cross over, and that would be massive. The Nasdaq usually leads the market around, as you know. So I mean, this could get ugly. I know we had a pretty big bounce off that 20, the 30, 35 area last night, but I think we're heading lower, and I don't normally say that.
Yeah, no, listen, just that common sense bounce from the NASDAQ was the weakest, no doubt. Okay, man, listen, thanks so much. Have a great one.
Thanks, Tom. Okay, guys, we'll pick it up again tomorrow. Stay tuned for Steve Rhodes.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.